I love your line from earlier in the week, I believe. In 30 years of covering U.S. equity markets, we can't think of a time where analysts have so seriously underestimated U.S. corporate earnings power in any given year. Are you referring to tech or the market at large?
It is actually both. You know, at the start of the year for the S&P, the street was looking for like $167 a share. We're going to do 200 plus this year. And that's been the reason the market's gone up. And it was exactly the same way for tech. Every quarter, this group and the market as a whole has outperformed earnings expectations. We think it's going to happen again this quarter.
We've seen a few examples outside of tech so far this week. Pepsi, Constellation, Levi's had, I guess, better than expected commentary on margins and supply. Do you think that's the canary for the quarter?
It is in both directions. You know, companies do have to face a lot of logistics challenges, and we've heard some pre-releases, in the last month that warned about that. But at the same time, now we're walking into the bulk of earnings season, where the numbers, and we're talking about tech mostly. In every single case, the street's Q3 numbers are below the Q2 actuals. Every single big tech, Apple, Amazon, and so forth. That just seems very low, given that we've had economic growth, better employment data, GDP growth, global growth. So the backdrop's very positive. And the numbers are still quite low.
Nick, do you think it's possible that we'll see these tech giants not move together after earnings and that we'll see a divergence because they are facing wildly different issues? I mean, just look at Facebook versus, say, Amazon.
Yeah, exactly so. And Amazon really has been the standout, by the way, for analysts cutting numbers. At the beginning of this quarter, they were looking for like $15 a share. They're down to $8.90, $9 a share now because the company's been talking about logistics challenges. That to us is sort of the downside story in tech. But you do have more cyclical components, Google being an example, where numbers came down for Google over the last 30 days. But it's a very cyclically oriented, ad-based company where spending by corporations should be rising as the economy recovers. So I think your point's well taken. There will be a divergence. And with Amazon especially, there already has been.